Okay, folks, good morning and welcome to Swing Trading Today. We have a lot going on this morning. We're going to go to the pre market activity. The headlines, I really don't want to focus all too much time on the individual headlines, but the headline flow. Let's talk about the flow, not the individual specifics of each article, because I don't know whether it's hype, uh, fear mongering, and I don't want to be a participant in that. Because we don't know what we don't know right now in this market environment with regard to the spread of CV. So let's just scroll quickly. This is fairly fresh, and it began during the president's press conference, which I found a bit odd. Not odd. I don't believe in irony as a trader. I'm very skeptical of as to why. One article came out. I believe they removed it off of Zero Hedge. First case of CV appeared in Northern California with an unknown origin. From Northern California, probably one of the most liberal places on the face of the earth, and that comes out while the president's speaking. Go figure. So that's been removed. Unless somebody could find it up there, I looked for it, and last I looked, it was gone. We have another headline out here, and this is, again, speaking to the flow. I don't know this to be true, and I am not saying that any of this is true. So please, I don't want to be painted with that brush that there is any truth to these headlines whatsoever. I'm sure that there's a lot of click happy folks out there publishing this stuff, and they're doing it for views. So let's take it with a grain of salt. Good morning, Trent. Scientists discover HIV-like mutation. I've heard this before, which makes coronavirus extremely infectious. Next headline, and this all came out in the past few hours. This wasn't up when I went to sleep last night. UK government documents warns corona could infect 80%, kill 500,000 Brits. Again, you know, who knows who this guy is that's writing this? Who knows? Uh, let's see if there's anything fresh up there. Yeah, well, this is not shocking. There is an economic cataclysm coming. That is going to be factual. Italy investigating price gouging. It's no big deal. It's expected. It's not good. So that's pretty much it. This is important. Decoupling accelerates. Not so much for important for the global economy, more so negative for the Chinese economy. You're going to see more and more of this. This is not going to end well for the Chinese. So, very damaging to their economy, therefore, very damaging for the global economy. Decoupling accelerates. Google and Microsoft shift production from China. So, and I received it. I don't want to bring up the Google, the YouTube comment because it looks like it's the gentleman's full name, and he left a comment. It wasn't rude or anything like that. It's just that I leave gaps or pauses in between my words when I'm reviewing the charts, and it's because the only reason why I do that is because I'm analyzing, I'm thinking as I go along, and um, it's just what I do. You know, I have to stop and think. We're not wired to multitask, so it takes me a moment to put my thoughts together, especially live, and to get the words out. So my apologies if there's a pause or whatnot, but I'm trying to give thoughtful consideration to what I'm looking at on the charts. And what I want to talk about is the sectors, or are the sectors that I'm looking at as potential trades for a bounce on this market, and there is a bounce coming. No doubt about it. There is a bounce coming. So we'll take a look at those stocks, sectors in a moment. We were long of the banks a little bit yesterday. We did some buying the day before. We had to stop out though, because yesterday's price action was not what bottoms are made of. And I discussed this with members that rarely if ever, do you wake up after a market's been in a steep correction. Rarely do you wake up and you see bright green futures and that's the bottom. Normally what you're looking for is Armageddon. And you want to wake up, you want to see futures down double digits, no, triple digits. You want to see just blood in the streets. So while this morning we're waking up and we're seeing that the S&P futures are down significantly, is this a bottom? I doubt it. You know, we were down a lot lower earlier in the session. And this is a 4-hour chart. You can see that we bottomed out overnight. As a matter of fact, when I went to bed last night, I set an alert, and it goes to my phone when it's triggered. I set an alert for a break to new after hours lows, because the markets broke to new daily lows when the president was speaking. And I set an alert to be advised of when we break to a new daily low in the after hours session. That alert was fired off at 9:50, and that opened up a floodgate of selling. And ultimately we bottomed out overnight at 30.69.75. Now it looks as though on a 4-hour chart that we have an outside reversal bar, this new 4-hour bar. There's another bar that just opened up at 5 a.m. It looks as though we may have a short-term, very, very short-term bottom here. Is this the ultimate bottom? I doubt it highly, because what we need to take a look at is not simply the 4-hour chart. I mean, if we're relying upon daily and intraday charts to divine what a bottom is, you're going to lose money. You need to take a step back, and this goes to my multi-time frame analysis strategy. You need to take a step back, get away from the daily and intraday charts, folks. Please, I beg of you. You want to identify on a weekly chart. Let's put this into perspective. You want to identify on at least a weekly basis where we may have buyers of like mind in a mass scale who'll be willing to step in and buy the market along with you. Now, where we bottomed out overnight coincides roughly with this support level here. Now, is this good for a bounce? Yeah, but just not a bounce. There's not a ton of history at this support level. It acted as support one time, 2 times, double bottom retest back in December, off to the races. So it was a launching pad, it was defended, but you don't have a tremendous amount of support at that level to say, okay, I'm going to step into the breach here, buy the market longer term as an investor, as a trader, maybe. As an investor, no way am I going to plan on buying the market, putting those shares away for 5-10 years. Because what you need to do is take an even further step back and take a look at your monthly charts. Here's the reality, folks. The reality is that we have 2 trading days left to go. We have a bearish reversal bar on the month, absent an act of God, and we reverse to rally off the lows of the month. We have a break of support on a monthly basis, and I don't think that we have an investable, and there's a difference, right? There's a tradable bottom, and there's an investable bottom. A tradable bottom, maybe we'll see it today. An investable bottom, we're not going to see an investable bottom until we get a two handle on the S&Ps. And that is significantly lower than the lows of the overnight session. So I would caution greatly against simply using the daily charts or the intraday charts. Those are for the people that are trading on margin and are not wise enough to get off a margin, and they will blow up their accounts. They will not be around this time next year. So please take a step back. Don't feel obligated to step in here and buy this market for the long term. We are going lower. Let's get to the pre-market activity. All right, so back to the S&Ps for a moment. Let's talk about tradable bottoms. What's good, what's bad here? What's bad is that we have a new daily low. What's good is that we have RSI, despite the fact that we are putting in lower lows, it's trending higher. So we have a positive divergence on the RSI 4-hour basis. Now, do I have a wish list of stocks I'm looking at? You bet. We'll be looking at the cruise liners. We'll be looking at the airliners. We'll be looking at the banks. And to a lesser extent, the banks versus yesterday. And I'll tell you why in a moment. Now, we are flirting with a continuation move higher. And I think that this market will rally significantly if we put in a new high versus this last 4-hour bar. Again, this new bar, which is hard to see here, but it is active, just opened up 12 minutes ago. So a lot can happen between now and 9 a.m. when this bar closes out. So we'll see. And volume is light right now. Now, if we take out the lows of the session, meaning what was the low here again? The low was 30.59.5. I don't know whether or not we're going to go down to a two handle today, but I think that we'll go down to what could be support down here. Again, a tradable bottom, not an investable bottom. So what's the difference again? Investment, you're looking to buy for the long term. You want to throw a couple of shares of a stock you perceive as a value into your 401k? Good, go for it. We're not there yet. The tradable bottom is where we'll see a short covering rally. And I think that we're fairly close. Would I like to see more blood in the streets? Sure I would. And I think that we're getting close to it down at roughly a 30-50 handle. And we're just shy of that. We weren't that far off earlier today. So it may seem like a long ways away, but it's not. We were twice as low, even more so than where we are at current, just a couple of hours ago. A few hours ago, I should say. So patience, folks. Long story short, patience. Now, I'll go back through the other stock market charts in a moment. The chart I find most fascinating is the dollar. The dollar is tanking. It should be no great surprise. We're putting in lower highs and lower lows. But we really broke overnight. We were lower. We have bounced back a bit. So we're beginning to see signs of a loss of confidence in our currency. And I guess that was a couple of pauses there, and I'll get criticized for that. I want to check out bonds, because if you see bonds, which are doing well this morning, if you see bonds in the US dollar decline in tandem, I don't mean just simply pullbacks. I mean real big sell-offs. That's a major concern for the markets because that'll be a crisis of confidence. We're not there yet. The bonds are still strong at current. They're a bit overbought on a daily basis. And it appears as though we may press higher here. But keep an eye on those two trading in tandem to the downside, because that will mean that we have yields pressing up higher and a declining value of the dollar. That's puts the squeeze on everybody. Everybody. Let's take a look at gold. So gold was a lot higher earlier, and we pulled back off of those highs. We're still up well over a third of a percentage point. I think that what we're seeing here is a setup for a continuation move higher on gold. We have a W formation which is formed. Here's the left side of your W. Here's your pivot point, with the high of that pivot point being 1657.1. Here's the right side of your W. Here was a challenge to the pivot point. We were rejected. We have a sloping pullback. We're holding support. So what I'd be looking for is a move out of this base. And if we get that move, you need to expect all sorts of shorts covering their gold positions and a spike higher on gold. Now, we did begin adding to our, I shouldn't say adding, I'll say this. We sold puts against the NUGT yesterday, and that's a bullish play. So we bet that the shares would not trade down below the strike price we sold. And it looks as though that'll probably pay off today, but we want to go buying more. Let's take a look and see whether or not we have any activity this morning. Yeah, they're already moving it up higher. So they're already moving NUGT up and out of this trading range. But this is going to be on very, very light volume. It's 1,000 shares. So we'll see where this goes later on in the morning as volume picks up. But it appears as though at current we may have a breakout on a 4-hour basis on NUGT. And gold is setting up nicely with the dollar weakening, and yields moving lower yet again. This is the perfect storm for the gold miners. So we'll be looking to rebuild. We were booking profits earlier in the week, late last week, and now it's time to begin looking to reload up yet again on this position. So members, more to come with our gold mining trade. Okay, let's go back to the stock market futures. We'll check out the Russell. We'll check out the silver. Yes. Good morning, Bill. Oh, Will. Sorry, Will. Yes. Silver. Let's bring that up, as a matter of fact. I'm glad you brought that up. I would not have gone over it. So silver has a different setup than gold. It's not a bad setup. It's just different. So obviously we pulled back, bottomed, rallied, pulled back. We have a higher low. Triangle formation, breakout, pullback, retest. Now what we're looking for, Will, is a continuation move higher out of this range. And don't be surprised if we pull back yet again. That's your setup. And once we begin to break out, if we break out and above 1820, which is acted as resistance, and we close there, and we break out yet again, that's the real move that you'll be looking for. That'll set a fire under the shorts of Schwartz, pardon the pun, and it'll send the shares up higher. I mean, silver is a very thinly traded commodity, and it will, when silver runs, it runs really hot and really fast. So watch for a move above this 1820 mark, and if we get that, it's going to be all systems go. You have RSI moving up higher. Higher lows, higher highs. Yeah, it looks like we're going to pull back and retest yet again. You're welcome, Will. Good luck with the trade. All right. And I think the dollar should help. Well, the dollar weakness if it continues, and I think that it probably will, given the price action of today. Let's take a look at the Russell. All right, so we bounced off the lows of the session. We're meeting resistance. So it's great that we had this outside reversal bar, but without the follow through, it means really nothing. If we take out the lows of the session, then it's not going to be a good morning. We're down over 0.75 of a percentage point on the Russell at current. We still have the traits we're seeing on the S&P 500 seen on the Russell 2000. So again, I think that despite the gloominess that we're seeing this morning, we are going to have a rally at some point in time. But ideally, this gets uglier before the open. And the uglier it gets, the higher the probability that we're going to get a reversal, because there are many stocks out there that are very, very oversold and ripe for a bounce. And I happen to be loving the cruise lining names as a trade, not as an investment. And I'll go over a couple of them in a moment. So the Russell remains under pressure. RSI improving. We'll take a look at the chart of the NASDAQ 100. Hey Sam, good morning. How are things over in Italy? What's the man on the street saying over there? Things getting better, worse, stabilizing? I know Milan has a lot of issues, right? Let's go over, where's the NASDAQ 100? Well, I guess normalizing. It's better than getting worse, right? Good morning, Bray. Where the heck are my NASDAQs? There we go. All right, so the NASDAQ this morning. Again, we're seeing across the board improvement on RSI, so while we can't trade off of the RSI alone, it's just an indicator that tells us, listen, be on guard that we may just get a counter trend rally here. Obviously, we have a reversal bar. We are seeing pressure above. If we break down below the lows of the day before the market opens, this is going to create a very, very good opportunity. Dune Runner looks like a fake bull. Not sure what that means. One corona case in Estonia. Sorry to hear that. Is that where you're from, Bray? The coronavirus is not an issue. It's the panic news. Yeah, the news they're going crazy with this. Anything for clicks. SARS was worse. Here some people have died because they were too old with other diseases. Interesting. Well, welcome. Welcome, Bray. Oh, really? So one of the victims of the CV, I have to be careful what I say. CV was 75 years old with cancer. All right. So they were vulnerable. If they even had the normal flu, they would have been susceptible to the same outcome. All right, gotcha. Interesting stuff. So that's why I don't want to go digging down into those headlines too deep, because I don't want to be a part of some gimmick on the part of the news media trying to get people afraid and click. Platinum under pressure here. Let's scroll through these quickly. Palladium, which was on a tear. Possible double top here. Be careful of palladium. We're breaking down below support levels. This rally looks to have short-term run its course. And again, folks, what we're talking about here, I'm going over the pre-market futures on 4-hour charts. It's only implies where we may open. Look at oil. Hammered. Down nearly 2% on the day. It's probably only going lower. Let's check out nat gas. Down nearly 3.5%. This broke right through 1.8, and it's actually acting as resistance now. What a huge break on nat gas. There has to be a trade to be had here pretty soon. So these are names. Energy, the cruise liners. I want to give you an example of what we're looking at in terms of oversold plays. Carnival Cruise Lines. RSI at 19. Yeah, 19. Another one. What's Norwegian Cruise Lines? NCHL. Norwegian Cruise Lines. Where are you? I had you up here earlier. There we go. All right, we have RSI on Norwegian at 15.58. This is unsustainable. And these are the opportunities, tradable opportunities, not investable opportunities. And I'll give you a stark visualization of what I mean by tradable versus investable. Tradable means a couple of hours to a couple of days. So we have RSI 15.58. We're leaning into the third standard deviation Bollinger Band, and we know where historical support is and where our entry would be. So great from a trading perspective. As an investment, if you're thinking about, wow, looking at the daily chart and saying, wow, so much damage has been done here, the only way is up for the next few years, I'll sit out the volatility. You need to take a step back, bring up your monthly chart, and say, okay, what's the reality here? And the reality is that we are breaking critical multi-year support levels, and we can go a lot lower. Let's bring up CCL. Look what happened with CCL back during the financial crisis. One as low as 10.92. I'm not saying we're going to get the same thing now, but just when you think it can't go lower, it can. So watch for a pop. I'm sure we're going to get a pop out of these things. I'm sure people have been shorting the heck out of them. So those short interest numbers don't update until the following month. So you may be looking at data on Yahoo Financial or wherever, and it's not current data. I'm sure the short interest is built up dramatically on these names. But check out airlines. UAL. You can take a look at names like American Airlines, JBLU as well. Now these are going to pop soon. RSI at 24.04 can go lower. JBLU, let's take a look at that one. We're looking for the ones where we have the least international traffic with the highest short interest nearest historical support. So JBLU is certainly a candidate. RSI still can go a lot lower here. And we're also watching the banks, which we were stopped out of. I tried to do a little bit of bottom fishing on them and didn't want to fight the market. So we stopped out. I'm sure we're going to move lower this morning. And we'll look to re-enter. The key is the bond market. The bond market appears to want to move higher. It's overbought. So we'll be looking to take advantage of a top out in the bond market and a rise in yields on any correction in the bond market to buy the banks. They will do well because of net interest margins, NIM. Yeah, HSBC, they fell off my radar screen because of all the events that have transpired. I wanted to short them. I think they're still shortable. They're dropping now. HSBC, oh yeah, look at this. HSBC gets 50% of their revenues from Asia, 90% of their profits. So this is certainly a short candidate. And we'll leave off with Sam's NEE. Yeah, it's still strong here, Sam, but we're weakening up. Yeah, be very careful. I mean, we were parabolic. I mean, I would be looking to lighten up here and get while they're getting good. First out, best out. All right. And with that, folks, I'm going to ask if you could please give the video a like if you could. Tonight with members, we're going to be doing a inner circle. So members, let's plan on getting together tonight. Get your symbols ready that you want me to review live, 6 p.m. Eastern Standard Time tonight, and I'll send you out a link to the private inner circle. We'll go over your charts, and everybody have a profitable trading day, and I will talk to you soon. Be well.